All right, welcome back. Let's dive straight into probably the biggest financial story right now, the potential Federal Reserve rate cut. We're looking at September 2025, our goal today, to cut through all the chatter, the latest inflation numbers, what the Fed's saying, what the market thinks, and give you a really clear picture.
Absolutely. And the timing is interesting because the latest inflation report, the June 2025 CPI data, really set the scene. It came in, well, a bit hotter than expected, and that definitely casts some doubt on any rate cut happening before September.
Okay, so let's unpack that. This June CPI report seems crucial. What were the key numbers? What really jumped out?
Well, the main number, headline CPI, that rose 2.7% over the year. That's up from 2.4% in May, actually the highest since February 2025. But, the Fed really zeroes in on the core number that's stripping out food and energy, and core CPI. It came in at 2.9% year over year. Month over month, it was up 0.2%.
So both headline and core are still quite a way off the Fed's 2% target then.
Exactly. Still stubbornly above that magic 2% level. That's the main takeaway, really.
Hmm. And what's actually pushing these numbers up? Is it one specific thing or is it broader pressure?
It's kind of broad, actually. We're seeing some hints, maybe early signs of the tariff impact. Things like apparel prices were up 0.4% in the month, household furnishings up 1%.
Interesting. What about cars?
Yeah. Interestingly, vehicle prices actually dipped a little. New cars down 0.3%, used cars down 0.7% month over month.
Okay.
But countering that, you had energy ticking up. Gasoline rose 1.0% in June, pushing the whole energy category up 0.9%. And food costs, well, they rose 0.3% in the month. They're up 3% over the year.
Right. And the usual suspect, housing.
Still the biggest piece of the puzzle, yeah. Housing or shelter costs, they just keep climbing, up 3.8% year over year. It's really the main engine driving overall inflation right now.
Okay, so with inflation looking like this, kind of sticky, especially core, how are Fed officials reacting? Are they sounding like they're ready to cut rates soon?
Not really rushing, no. Their stance is pretty cautious. You hear folks like Bowman, Barr, Daly, Williams. They're all kind of saying the same thing. They need, and I quote loosely here, more months of solid data showing inflation is consistently coming down towards that 2%.
So they're open to it, but need more convincing.
Precisely. Open, but definitely not signaling an imminent move. They're watching the data very, very closely.
But the market seems a lot more certain, doesn't it? What are traders betting on?
Oh, absolutely. The market conviction is much stronger. If you check the FedWatch tool, which tracks probabilities based on futures trading, it's showing like a 60 to 70% chance of a rate cut in September.
A 25 basis point cut, right?
Or a quarter percent.
Yes, exactly. A 25-point cut at that September 17th, 18th meeting. And looking further out, say by December, the probability is nearly 100%.
Wow, so July is basically off the table in their view.
Pretty much. That July 30-31 meeting is seen as highly unlikely for a cut.
And we should probably know, just factually, that President Trump has been quite vocal, publicly calling for the Fed to lower rates. Yes, that's right. He recently urged them quite strongly, citing low consumer prices in his view and saying, bring down the Fed rate, and now W.
Okay, so Fed's cautious, markets betting on September, inflation is persistent. Here's the key question then. What could actually change this September outlook? What are the triggers?
Right, that's the million-dollar question. It really comes down to a few key things. First and foremost, the next couple of inflation reports. We need to see the CPI and PCE data for July and August. If those show inflation cooling down significantly sharply,
Then September becomes much more likely.
definitely. But if inflation stays high or worse, ticks up again.
Then the Fed probably waits.
Right.
November, December maybe.
Exactly. They'd almost certainly delay. The other big factor is the job market. If we suddenly see signs of weakness there, that could push the Fed to cut sooner, even if inflation isn't quite at 2%. We did see, for instance, inflation-adjusted hourly earnings dip slightly in June by 0.1%, so that's something to watch.
And those tariffs you mentioned earlier.
Yeah, how those play out is another variable. If they start pushing inflation higher in the coming months, that obviously complicates the Fed's decision, too.
So putting it all together, what does this mean for you listening right now, trying to figure out your own finances?
Well, the bottom line is that a September rate cut really hangs in the balance. It depends heavily on those next two inflation reports for July and August. It also depends on whether the job market stays strong and how much pressure we see from those tariffs. It's a real tightrope walk for the Fed.
Trying to beat inflation without hurting the economy too much.
That's the core challenge. Tame inflation, but don't trigger a recession.
Absolutely. So thinking about all this, the sticky inflation, the Fed's caution, the market's bet, how might this uncertainty affect your decisions? maybe around savings or big purchases. What really stands out to you from this deep dive? Something to think about until next time.